Good morning, ladies and gentlemen. Today we're going to be talking about the big move coming for the Russell, and it's a peculiar thing where we're going to be talking about the Russell. We really don't cover necessarily the Russell on the channel, but it has been a pretty good indicator of the up and coming moves on the market as a whole, and basically it's got a pretty big warning sign for either team. So if you're team bull or team bear, you really need to open your ears and basically watch these signals, because both teams are getting a bullish signal and a bearish signal in their camp. So the bears are seeing the downside potential and the bulls are seeing the upside potential, and both teams are kind of getting an equal view of being right. So without further ado, let's dive into the charts. So this is where it gets interesting for both teams. We're going to start with the bulls first. So as you can see on the Russell, if you look on the daily time frame, it is a pretty clear-cut bull flag pattern. Now, this is a sideways consolidation to the downside. However, it may not be totally valid just because you have breached the upper line here and you're not getting that traditional where the top of this wick right here is your flag pattern. Nonetheless, the market is above the 200 daily, 200 weekly, all the moving averages. The 50 daily is actually coming for a bullish golden cross on the Russell right here, where the green line and the red line are going to cross over, indicating short-term price is now bullish versus long-term price is actually bearish. So the bulls are going to be looking at this and saying, okay, possible bull flag, golden cross, okay, time to go all in. And they've been basically buying all the dips on the Russell. And the Russell has a peculiar pattern. So if we always zoom out to these larger time frames, you have a massive head and shoulders pattern forming right here, which basically, once you get back down to this neckline, which is around the $171 on the IWM, that's what I'm using for reference here, guys, you basically see that it's a pretty bearish pattern. That's what the bears are seeing. So again, both teams are getting basically what they want. And some of the things that the Russell actually did today finally filled this gap here. So if you're in the camp for the bullishness, you definitely could get that upside potential. And the Russell, again, is an indicator of possible movement in the stock market. So A to B completes at the $201 point, meaning small caps joined this rally, which would include the regional banks. We did cover carry yesterday, guys, so link down in the description below, guys. So if you want to go see that video, you can. And also I will have it as an end card in this video. So if you want to stay to the end of the video to see that, you're more than welcome to, or skip to it. So basically, looking at the IWM for the bullish play, once we breach above these highs of $189, you definitely have the potential to come up to challenge this 201, especially if the market starts getting on a tear. Now, that's where the bullishness kind of ends and kind of begins at the same time. And that's the reason I'm saying that is because you do have them the shorter time frames, and you could easily, with this pattern, invalidate the longer term bearish pattern. You are also getting very close to a golden cross, but then again, usually it's a lagging indicator. So it's not necessarily something that I would use to completely trade off. But if we came back through this area basically here, it's considered like no man's land, where there's not a lot of recent price action to support you. So the Russell today, with some news catalyst and the whole market as a catalyst, which was pretty interesting, and they spun it as basically Powell, the fear of Powell basically talking. And yet again, guys, just a reminder that we do have Chair Powell talking tomorrow, testifying before Congress. So that's going to be an important thing. And he's also testifying on Thursday. So keep those in the back of your mind, that Powell can basically be more hawkish, less hawkish, not really comment on monetary policy. But usually he sends the market up one day and sends the market down one day. So we're going to have to be pretty keen on that. And he could also just send the market one way on one day. So again, multiple scenarios at play, but he could also maybe want to stay away from monetary policy and kind of just give you the committed shtick that he always does. So with the Russell, we came down to a key pivot here that we actually pivoted off of, where basically your price action stops being formed as a congruency. And you basically, if you were to break through this level here, you pretty much have an easy way down all the way to about the 180 level, which is a lot of where your key moving averages are, and you could fall into the kangaroo. Now, recent price action, you have large bullish volume and large bearish volume. So again, both camps are getting what they want. And what was interesting today is the housing numbers that we got. We got housing starts coming in at 21.7% start for the month of May, which is absolute insanity. We got basically by a 250,000 beat on housing starts for the month of May, and then building permits were up as well. So the housing sector of the economy is growing significantly, and that basically means higher inflation for shelter costs. That's one of the things that the Fed is looking at to basically say, hey, we've done our job, we've slowed down the housing market. The housing market was one of the biggest contributors of the inflation metrics along with energy, and it's basically being the stubborn one. So it's showing that it doesn't necessarily want to go away, and the Russell and the indexes took it as a bad news. So do we basically build on that tomorrow with Powell, or do we basically eliminate and they buy the dip as everything is today, especially with the Russell? If you look at the candle that we had on the Russell today, basically a buy the dip candle. The bulls defended this level here, pivoting off of 183.83. And basically, we could definitely pivot to the upside here and start completing or challenging that A to B pattern. Now, if we start breaking to the low side, then we definitely have potential to keep going lower, especially this would start really looking at head and shoulders pattern, and you would basically have to break the moving averages. I think you would crash land on the moving averages, find a short-term bounce, and then the question would be, do you come back to invalidate the right shoulder that would be formed around this node here? So if this is a larger A to B pattern on the way down, that completes at roughly 158.30, which takes out the September-May lows and basically forms a new basic bear market for the Russell. You would fall back into bear market territory, and that could be led by some of the banks. Again, the regional banks today were not having it at all. Just going to jump over the KRE to show you. We basically said this is sideways consolidation, and it's really crucial that the banks bounce. Now, too long didn't read version for the previous video that we did on this is if you have one more two red days, I expect a pretty big waterfall elevator down moment, and I think Powell is going to be the turning point, or he'll decide which way it goes. This definitely could be a bull flag pattern similar to how the Russell is trading, but it could also absolutely be insane carnage. And remember, with the S&P and the Nasdaq, you basically have a couple of stocks keeping them up. So if IWM shows weakness first, I would expect S&P and the Nasdaq to follow. And speaking of our glorious friends, the Nasdaq and the S&P, jumping over to the S&P, it's pretty interesting. Again, we have the weekly levels that we basically talked about last week, 443.61 and 428.58. So we're right now range bound. We're actually basically in the middle of the range. So if we go from the closing price today to the upside 1.47, downside 1.97, so 1-to-1 risk to reward ratio. So it's an interesting bet depending on which side of the story you want to be on. Now with the S&P, you do have a gap to the upside, and you have a gap down here to the downside. So you could get a Powell moment that he sends the market up one day, fills that gap really, and we would be more cautious to fill that gap. And then let's say we sold off because we're still fearing what Powell could say, then we definitely could get the retracement back lower, basically setting up a short-term A to B, B to C leg, let's say, completing down the 430 level. And this is a very small intraday pattern, so we definitely could see that. Now, today's volume was basically pretty light, nothing really notable on the volume. And the same way with the Nasdaq, we had a green day doji candle on Nasdaq, but you didn't take out the previous highs on volume from the previous candles. Now that was post quad witching, so again, this is an area that basically some of that stuff could be getting flushed out. We're not in the beginning of the month, so you're not going to see any of that 401k money, but the Nasdaq does not have a gap here. And again, doji candles usually can indicate a consolidation. They can indicate 50% of the move, so another 50% would probably bring the Nasdaq to the 360 level. Or we could basically be looking at an indecision where the market really hasn't decided, and then you go sideways consolidation or just continue downwards. So again, not really clear direction on what the Nasdaq wants to do. We do have some warning signs showing up on the Russell, the S&P with the upwards gap. So we have to see how the indexes correlate with one another on the daily and basically look at what that's going to be doing. And if we quickly jump over Russell on these price action tools, we can clearly see we're in a price action zone here that we've basically been bouncing around, consolidating in. So the MACD does look like it basically wants to curl up, but you know, on the daily. So if we jump over to the IWM on Lux Algo, just to see what it's kind of telling us, you can see that we had a MACD cross today on the Russell, which is pretty bearish. And again, on the Russell, we have not got a cross of this basically smart money flow. Smart money flow is staying bearish, and they have relented a little bit, but they're now starting to get more bearish as we trend lower. We haven't really seen an impulse, but we did see a reversal point right here at near these peaks where we hit the price action zone. Now, we could come back to challenges if we do, like I said, with the bullishness. If we get that bullish reaction in the market and start breaching above these highs, we definitely could invalidate the zone and head higher. Or if we head lower, basically looking at that 180, which would be the moving averages. And are we going to come back down to the 173s to retest that? And if we jump over on the weekly, we can see that we're starting to get selling tails on the weekly chart here, and the weekly candle starting off with a doji. But then again, we got 4 more days to determine what that's going to do, and we could be setting up again for the head and shoulders pattern on the IWM. If we look at the S&P on a weekly time frame, MACD still staying strong, and you're still on the green impulse on the smart money where smart money is buying, but however is an inside week so far. NASDAQ, same story. And this indicator right here of basically the momentum to the upside is getting stretched. The relative strength index basically sitting at 81, and the MACD separate from one another. So if we get basically a sideways consolidation week, that would probably be healthy for both teams. We're starting to see a calming in the fear and greed index and maybe a pullback. If you're bullish in this market, sideways could be the new down for you, and we could consolidate sideways this week, allowing some of these indicators to calm down to then possibly get it pushed to higher highs. And NASDAQ definitely could then have the potential to start challenging these all-time highs. But the S&P is looking a little bit weaker compared to it, just because remember, we got the regional banks in the S&P versus tech that is kind of insulated from that. And IWM, which is basically all your small caps, are showing more weakness than they had previously. And again, you started having the previous week a reversal signal showing up possibly on the smart money indicator, and usually with those you get basically a continuation 1 or 2 weeks later. So we definitely have to be cautious about stuff. Remember, both camps see something they want on the charts, and we just have to see how it plays out. The simplest way that I would say is if the Russell doesn't catch a bounce in the next 2 days, I'd be looking for more downside potential or a break of this previous low of basically the $183.76. You break that low, break the 183 mark, you're basically heading significantly lower, coming back through this price action to at least the 178 level, and that's where I'd be looking to maybe catch a bounce, or even on the 50% retracement of this move up, which would signify about the 180.56 mark. But again, I do think we could get a 60% retracement on the Russell to 178.51 on it, and once we got down there, that may be where we would go more bullish, because the index MACD would be curling possibly back up towards one another after the cross day, and the RSI would have calmed down a little bit. So again, you can be bullish on this market. It's just, would I be buying at these elevated prices right now? No. I'd be looking for that pullback that will be healthy, and then let's see what Powell says. We have to be receptive again to what Powell says tomorrow and the next on Thursday. Also, we're going to see initial jobless claims to see maybe if that calming in the labor market is going to continue, or is it basically a fluke. And then Friday, we really just have a bunch of Fed speakers, but nothing besides services PMI that could really move the market on Friday. So right now, I think the tone is going to be set for the rest of the week based on what Powell says in his opening remarks, and just seeing if he's going to continue to be more bullish or less hawkish, or basically more hawkish. We just have to be cautious about that. And with that, guys, I thank you so much for watching. If you could like, comment, and subscribe, let us know what you like about the video, what you didn't like about the video, or what you want to see improved. And as always, if you have a ticker that you want requested for Friday, throw it down in the comment section below. And I hope you have a wonderful day.